All right, we had some interesting news this morning. The ADP report came out and it wasn't good. It showed that there was weakening in the labor market, and that did not initially cause the markets to fall. It was actually some news that came a little bit later regarding Microsoft. Even though they are spending a ton of money, they have huge CapEx, capital expenditure on the growth and implementation of AI. They're now saying that's not going to turn into the revenues that we thought it would turn into. Now, the market did not like that. You saw that pre-market, everything just flushed, big, fat expansion, red candles to the downside. Now, largely, ever since last week, the low volume up week that we got during Thanksgiving, the market's struggling to build higher above last Friday's close. If you're looking at these charts the way that I am, I'm seeing that the bulls are on the struggle bus moving higher right now, which means that there is more risk for the bulls right now to hold these positions and to believe that that low volume melt up week is going to somehow turn into a pump week. As I've said in one of my previous videos, that I actually see the first couple weeks of December being problematic. I see us having some struggle and some pullback here. And that isn't going to change until we can get back above all across the board, specifically in the AI story growth stocks, back above last Friday's high. We're still struggling. And it's good that we're consolidating here. But if you spend the time looking at the charts the way I do, if you move up and then you go flat and sideways, then you're actually building a structure that if you then later fall beneath, well, now you've got a wall of resistance above you. And that gives more strength and more confidence to the bears, saying, hey, if we go back to where we just went, that last Friday's high, or the last high on, let's say, Meta at around $648 to $650. If we go back there, remember, there's a lot of people who bought there thinking it was going higher, and they're going to be stuck. And so that's where all the sellers are camped out, waiting for the price to come back up. So in my opinion, we're still in an environment in which the bulls are at risk. Okay, and so this has been a profitable time frame. This week has been profitable for me because of increased volatility in the market. We're seeing some pretty big swings like we did this morning. The market swung down, set us up at the open in our live trade session in the Stocks with Josh community this morning. We were live trading. It was a little choppy. I took more trades than normal. But we had a number of great winners in there. We were able to catch that melt up on the SPY. We took it candle by candle. My live trade sessions, guys, and for those who are part of my community know that not only are we trading, but I'm teaching. I'm giving you my thoughts on every single candle as it appears. Sometimes watching those candles, I always refer to it as babysitting the candles. Sometimes it feels like watching paint dry. But we made good money. And if you guys made money in that live trade session, let everybody else know in the comments section if you're enjoying the Discord. And if you guys want to join that Discord and you want to learn to chart and be part of my weekend master classes, I call them Welcome to the Discord, but I cover everything in there. We cover scalp trading. We cover the MACD, the RSI. But I'm not the only one teaching. It's me and my crown traders. I'm not going to spend a lot of time talking about the Discord, but I appreciate those who join. And I want you to know that we've got 10 live trading sessions and we've got 5 teaching sessions every single week. And I'm not promising you a path to wealth and prosperity. I'm promising you an opportunity to come and trade with people who have experience and to learn the charts better from those who are passionate about the charts. I'm passionate about the charts. I had a nice little trade in front of everybody that I was saying, hey, we're getting ready. We got this ascending wedge on Palantir. We're going to hit this top spot. I jumped in some puts, and sure enough, it flushed. And I had more joy over calling it correctly than the money I made. And so if you guys want to be part of that, go to the website, which is the same name as the show. It's www.stockswithjosh.com. Welcome to Wall Street. This is the Stocks with Josh show. And the stock that I want to talk with you guys about today is one of these big tech players that's been winning. They won in November and they're still winning here in December. And you're probably thinking I'm talking about Google. Well, I covered Google a while ago. and that one's continued to be a beast in the marketplace. Google, I always think of Google right now. They're in everybody's lane. They're in all of the Magnificent Sevens lane. And there was some hot news on Google with Sam Altman from OpenAI saying we're in code red. Gemini is kicking our butts. And he said we need to stop trying to build the ad empire. They're trying to monetize ChatGPT. He said we need to stop trying to build the ads and get back to having a winning large language model, because Gemini, they already got that ad business locked in. That's called a moat, people. They already own that space, and they're in everybody's space. They're over in Elon's space with Waymo. They're competing with Tesla. They're competing with Apple's phones. They're competing with the cloud services. They're competing with GPUs with their TPUs. And I think that this move up on Google is going to be massive in 2026. I think this is just beginning. I think that that NVIDIA and Apple have a competitor that's coming up for that #1 spot, because everything that Google's been investing in for the last decade is slowly beginning to work. And more specifically, and this video wasn't about Google, but I got sucked into my thoughts on talking about Google. More specifically, Google wasn't winning. The stock was lagging the Mag 7 in the 2023 and 2024. It was always lagging the move higher, sort of coming up slowly after everybody else had moved. And that was warranted. They had regulation issues. They had not been as focused on some of their tech rollout that they should have been. But man, did they kick it into gear in 2025. And Wall Street noticed. And I think it's going to continue to be a winner. But I don't love the pricing where it's at right now. We've got to look for some form of a pullback. And I'll tell you, on Google, the best pullback that we could expect to get would be the 50-day moving average. And we may only be given the 20-day moving average, because Google feels to me the way NVIDIA did in 2023, where everybody was expecting that it had run up so much, and there was folks locking in those gains, when in reality, it was going to tier step those moves over the next couple of years. That's the position that Google is in. So let's pause on Google and let's talk about the stock that I wanted to talk about today, which is Apple. Apple is interesting right now, and they are making a shakeup. Matter of fact, they got a guy that had worked at Google for a long time, and then he went to go work at Microsoft, and they snagged him to come and be their new chief of AI. Everybody knows that Apple has done terrible on AI. And interestingly, and the thing they hadn't done is they hadn't spent any money. They hadn't invested in it. And I don't even ask Siri what the weather is, but I am entirely locked in to Apple's ecosystem. Every computer, laptop, iPad, my watch, my earpods, every bit of tech I own comes from Apple. I'm not doing nothing else. I'm not doing none of them Google phones or any other products. I ain't got no Dell computers up in this place. It's all Apple. Okay. And so that's what the market is responding to. If they could just get their AI right, they've got the locked customer base that's 100% loyal, but they need to have a real AI solution. And so the market loved the fact they're pricing in advance that Apple will do that, and that Warren Buffett was wrong to unload his Apple, and that Tim Cook's going to say, "You'll rule the day, Warren, that you dumped our shares." And who knows? At that point, we'll see. But Apple's been crushing it. Now, we called on this page the turnaround story on Apple a couple months back, right? And so Apple's been ripping higher and higher and higher. If the markets roll over in the first couple weeks of December, as we move closer to the end of this year, and I gave in a previous video reasons why that would happen, then the move up on Apple may be over. And I'm going to give you that as well. I'm going to give you a trigger line for a pullback on Apple. And some of you could use that trigger line as an area to consider a stop loss. It depends on whether you're swing trading or long-term investing in Apple. I'm going to just give you some technicals today that will help all the swing traders. But I want to tell you that what we saw in 2025 with Apple and Google pushing towards the top of the pack is a sign, I believe, that we'll see more of that in 2026. This was the largest market cap company in the world, holding that #1 spot year after year until NVIDIA dethroned them, I believe this last April. But with this recent price move up and with NVIDIA stock cooling off, Apple is slowly moving back up to remind all these other big tech companies who is the most important company in the world. I don't want to give up my Apple products. I don't want to buy another phone. I've been on that Apple phone since 2006, I believe, and so I'm not likely to change. And I just want them to get their AI act together. And Wall Street's loving the fact that they didn't overspend. They let everybody else overspend, and now there's going to be a glut of cloud and AI capability that they're going to be able to come in potentially. And after everybody else has depleted their resources and gone into debt, that they may be able to come in and get positioned because they're still in a high cash position. And of course, the old saying goes, cash is king, and Apple right now is looking like it's trying to reclaim Wall Street's throne. So let's take a minute, hit that like and subscribe if you enjoy this show. Let's dive into the Apple chart. I'm going to give you the important lines. Make sure you screenshot this and keep an eye on these levels moving forward. We'll see if they prove to be right. So this has been a very bullish move. Very few sellers. Wall Street's just letting this thing breathe and run and make a new leg higher. But I want to point out a couple things. We go into the Fib levels, Fibonacci levels. And for a stock that's on the move, and obviously it's been on the move ever since we got this massive volume node down here, signaled that Wall Street was loading back up. It consolidated briefly, and of course we've been ripping ever since, but we've moved all the way from $170 right back here at April of 2025. Here we are, over $100 higher, and I would tell you that Apple does not look attractive at this particular price. We've had a $100 move up. It doesn't mean that we can't keep going, but I would just tell you that as far as swing trades go, if you're buying Apple for a continuation of this move, you've gotten in pretty tardy to the party. But we are still seeing some very healthy buying. Even though it's decreasing, we're still seeing accumulation at these levels, which means that Apple is going to be a big winner in 2026, and Wall Street is increasing its exposure back on this product. So I want to just highlight something here about the Fibonacci, which I've taught recently in the Stocks with Josh Discord, that the shallow pullback level is right here at the 0.382 fib level. Now, this is where if Apple were to eventually cool off on this local pivot swing high, this is where at the moment we could likely come back and make a higher low, right? It's not going to look just like that. You're going to find that these moves down take a long time, right? But eventually, if Apple is going to digest this huge $100 move up, what I want you to understand is that critical support for Apple moving higher is $244 as defined by the fib. And then beneath that, and this is referred to as the golden pocket, this level back here. So if the market's bullish on Apple in 2026, they won't allow it to get back to the golden pocket where the majority of recent buying has occurred. They'll buy it early at the 2.382 fib level. But if the market were to get more bearish, the true level of support is where all of these transactional buys had occurred in the past, which happens to align with the golden pocket level of 0.5 to 0.618. Now, I actually don't think it'll get back there. I think we're past that point, but I do believe that when this move slows down, we will likely at some point get a test of this 244. Now, having said that, I want to draw your attention to recent price action because some of you are going to hear that I'm bearish on this and I'm predicting a move down to 244. Right now, I'm very bullish on Apple. It's continuing to run higher and it's breaking out. But I've got some levels that I think it's going to be very important that you're going to want to respect moving forward. Let's shift from the weekly time frame to the daily time frame because these are going to be your two most important levels. Let me turn off the volume range visual profile. Okay, so I want to be clear. This up move doesn't have to be over, but I will highlight simultaneously that right now we're getting a bearish candle pattern, or the potential of that, and which is an evening star candle pattern. That's when you get a surge up followed by a doji and then a breakdown. When the next candle after this daily candle, if we were to get one that were to close beneath 282.74, that would confirm that we would get all the way down to around this 276.93 range. But let's keep things optimistic. I want to show you the up move opportunity, because as you can see in the time frame that the market had been cooling off in November, Apple's been pushing higher. So the trigger for the next move up is a close above 289.20. So to be very clear, if we close a daily candle above 289.20, we're moving higher. Now, if you want to lock in some gains, you don't want to see a close beneath 285.05. That's going to officially be the first stage of this breaking down. Now, stop loss range is back here at 276.93. Now, let me explain that to you a little bit, because as stocks move higher, and you can see that we've done various levels of consolidation, you want to give them room to breathe. Apple could consolidate in this range, and in the first month of 2026, they could break above 289. That's why people do not normally put their stop loss right beneath the current price action. However, I will tell you that if we do officially close beneath this 276.93, that means we're getting a bigger drawdown and a bigger pullback. And so this current candle that we have today is a gravestone candle. Those are bearish, as Apple recently had a huge surge higher. Obviously, this is going to pull back. So again, for moves to the downside, watch the cross of 285. But we are doing very well on Apple. It's still cooking to the upside. A lot of good news has been priced into Apple, and it would take even more good news for Apple to get above that 289.20 and continue to climb, but it's very possible. And so you don't want to short this stock. It's been an outlier as the rest of the Mag 7 has cooled off because of their CapEx spend and their underperformance in some particular areas. Apple's doing the opposite, and it's moving higher right now, and that move isn't over. So watch 289 for that breakout, and watch 285 for that breakdown level. So one thing I want to express that I'm 100% confident about is that the AI rally is 100% intact, and it will continue in 2026, but potentially with new market leaders in 2026. And what we saw in November, I think we're going to see in 2026. The market has spoken, and they basically said Google and Apple look as if they're positioned for growth opportunity, and Meta and Microsoft have to kind of work some things out, and we'll reevaluate them when we get to Q4 earnings. Q4 earnings is between January and February, and most of big tech is going to report at the tail end of January. And at that point, that's when the market will reevaluate. And so I think Apple and Google have the potential to continue to climb, but for long-term purchases and for biggest risk to reward, it would be way more attractive to get them on some form of a pullback. And even a shallow pullback could bring Apple from 289 all the way to 244, 245. So have a plan going into 2026. I think it's the right thing to be highlighting that Apple and Google are going to be distinct winners in 2026. But if you end up buying the top now, you better make sure you've got just as much money and more to potentially buy any correction or pullback that we might get. Because as I said, Apple's up $100 since April, and that's one heck of a move, but it's gunning for that number one spot. It wants to get back above NVIDIA, and I think we will see them go neck to neck in 2026. And Apple has a great opportunity to integrate AI, and I think that Google's success is actually casting a positive light on Apple. And someone would say, well, how so? Google has that moat in their core business, right? And all they needed to do was to show that they could compete with ChatGPT, and they actually showed that they could both compete and beat ChatGPT. And Apple's in the same position. So they've got that moat. All they need to prove is that they can protect that moat. And I think the stock will get above $5 trillion in market cap. And so even though I've talked about the pullback, I still believe that any buy between now and that pullback, likely we will see a higher price for Apple in 2026. That's my opinion of the charts. This is not a suggestion for what you should buy, sell, or hold. Let me know if you are holding Apple strong or if you're taking profits and waiting for the next buy opportunity. I'd love to hear your guys' trade plan in the comments section. Drop a heart and let me know. Hit that like and subscribe. Peace and blessings. Don't sleep on the Stocks with Josh Discord. I'll see you in the next video. If you need better trading tools, check out the offer right now from the Moomoo Investment app. They're running a limited time promo. You can get up to $1,000 in NVDA stock just for making a deposit. Plus, they're offering 8.1% APY on your uninvested cash for the first 3 months. So your money's working even when you're not trading. I'm a big fan of their earnings calendar, and when a company reports, you can just tap the earnings tab for a clean breakdown of revenue, earnings per share, and company news all in one place. Also, there are 0 commissions on US stocks, ETFs, and options, and no inactivity fees. Whether you trade every day or just check in once a week, you're not getting hit with hidden charges. You get level 2 market data with over 60 indicators, so you have the tools you need. Go to the Moomoo link below to grab your free stock and earn 8% on your sitting cash.